Yes, folks, your eyes do not fool you. She is back. She's been gone for a couple of weeks. You can check out the playlist to see what her and her son Dane have been off doing. But let's catch up with the one and only Anna, REI Mom Kelly, and talk about the economy, inflation, rates, all these kinds of good stuff, because we always love to get her perspective. How you doing, Anna?
I'm doing great. So good to be back with you today.
Awesome. Why don't we actually dealer's choice? What topic would you like to hit first? What would you like to talk about?
Well, I think we'd be remiss if we didn't talk about Powell's presser today with Congress and what
Yes.
he said, kind of his big takeaways. I think, the main thing that he said, which you and I've talked about quite a bit on this show, is that we have a long way to go to get inflation back down to their target of 2%. They're not going away from their target of 2%. And despite the market's hope that this pause would turn quickly into a pivot and we would cut rates, I think he made it very, very clear today. Today, he was, basically channeling Paul Volcker, right? He was the hawk that said,
Mhm.
we have a long way to go. We're going to moderate the rate potentially of increases, the speed, but we need to go higher and probably for much, much longer,
Mm.
holding rates higher to try to defeat inflation once and for all while maintaining price stability. So I think a lot of people are going to be disappointed with today's speech. Doesn't surprise us at all. I've said many times on this show, we are a long way from there. And I
Mhm.
think that we're going to be dealing with more persistent higher inflation for a long time than most people think that we will.
Yeah, it's funny you brought this up. I'm glad we're starting here. This is the very first topic on my daily financial news this morning was his presser, and I let it be known that I now don't believe Jerome Powell. Frankly, I believe he's
Really?
doing what he has to do. I believe he's trying to be Paul Volcker. I believe he's trying to be a hawk, because I believe the last thing he could signal to the market is we're done raising rates. To be
Right.
clear, I don't think he's cutting. I never said cut. I do not believe him when he says there's more rate hikes coming. I don't
Mm,
believe the dot plot that there's more rate hikes coming. I used an analogy. I don't know if this works. I've never baked a cake in my life, but this was my analogy, Anna. The Fed and Jerome Powell have put together a nice recipe, followed the instructions, and now the cake's in the oven. I believe he just needs to wait and let the 500 basis point raise do its thing. And I believe he knows that. However, I know that maybe he's going to raise rates like he said. Because again, I have believed Jerome Powell the whole way here. I supported him when nobody else did, or,
right.
he's going 70. I mean, I've been like, he's going,
Right.
99%
Both
sure
of
he's
us.
going.
Yep.
Yeah. Now I believe he's standing in front of the oven. I believe he has a bunch of people chiming behind them saying, I want cake. I want cake. Unfortunately, as you know, I would guess, cakes take what they take.
Right.
If you walk up to the oven, go, okay, guys, I hear you, and you crank up the stove or the oven, that doesn't make the cake bake faster. In fact, it ruins it. So my belief is if he hits the economy with one or two more rate hike, he's going to break something and he's going to be forced to cut sooner. I think he knows that, right? Because again, shelter is going to roll over. Used car prices is going to roll over. Anna, we have a base effect rolling off in July that could take CPI headline to 2.9. 2.9 with shelter,
Hmm.
with used cars coming. So again, I believe he knows all of this. I believe
Yeah.
CPI core is a problem, but it's mainly shelter, and shelter is mathematically going to roll over. Um, this is something I passionately believe. And as I said in my daily financial news, I could be horribly wrong. What does
Right.
the baking
Right.
analogy sound like to you? Does that
You
work?
know, I I think a lot of what you said I agree with. I think Hal definitely understands, despite people calling him an idiot. Like he is a smart guy, and he may not have it figured out, right, and know exactly what levers to pull and when, and how exactly that's going to hit a very complex, intricate, intermingled global economy, right? So things are so complex that they really don't know how much pressure the economy can handle, how much pressure the banking system can handle, but they know they're about there. They've about maxed out what the banking system can handle, to your
Yeah.
point. And so,
Yeah.
they know that it's very precarious, I think, for lack of a better word. And that if they raise rates too much higher, it definitely could cause more banks to fail. And if you look at his presser today, and I read part of it, didn't get to read the whole thing, but he talked about, their dual mandates for price stability and max employment, but he also threw in there economic stability, basically the financial system. And this was the first time I remember that he threw that in there. Like, we know we want max employment. We know we want price stability, i.e. low inflation. But yes, we also want a stable economy. And so that's their way of kind of hedging that this is complicated. And he's got to watch all three of those things and see how much pressure one will have on another. So to your point about having to tell the markets that we're going to go higher, having to be hawkish, what they don't want is this another massive bull run of the markets, thinking that, things are great. And they don't want consumer confidence so high that we continue spending that puts more inflationary protection on the system. So if they did that, their job would be much, much harder because inflation would rear its ugly head again, right?
Totally
So
agree.
I think you're right on that. The other thing is, though, they also understand that inflationary pressures are higher than what most people think. And this is where, when you and I are looking at data points, like if you look at current data points, we've talked about on this show, 8 out of 10 are already deflationary. They're already recessionary. It's just wages and employment that are still elevated, and housing costs, to your point, have not yet rolled over. So they're still elevated as well. But if you look at the long term, longer out than the next year or two, you look at the forces in the economy, the macro forces that have longer term implications. We have a declining demographic, not just in the United States, but in the world. And what that leads to is higher wage demand. And that keeps services inflation much higher, and also consumer goods, because it trickles in, to the economy, that if people want more wages, you have a wage price spiral potential. So in the long term, if you look at economics and these like secular trends that are longer than 18 months, you see that we're going to have more wage inflation pressures than what we have historically. You've also got energy issues where, the push for more and more clean fuels is expensive. It requires a lot of research and development, and that is going to, over the long term, push up energy prices. When energy prices are high, that trickles down to every other area of the economy: food that has to be shipped, consumer goods that have to be shipped. And then again, your services inflation for wages. And then you have deglobalization. And that's a real issue that Congress is really looking at, is as a matter of national security. We need to get pharmaceuticals back here. We need to get semiconductors back here. We need to get batteries and tech back here. And so you're starting to see really a push for bringing things back on shore. That's going to have a very large cost. So I think that Powell is looking out further beyond like this current 2% and saying, how do we make sure that with all of these external pressures that are going to make inflation higher long term, I believe, than what most people are seeing right now, how do we try to get ahead of that as well? And so I think that Powell really believes that we're going to have to keep rates much higher for much longer for all of these other inflationary reasons, more than just the data that you're looking at for today. So that's where I think you and I might disagree just a little bit, is if he's thinking about those things, he really means it, that he's hawkish and he's trying to prepare us without freaking us all out that rates are going to stay high for a really long time.
Yeah, so I agree with all of that. And where I disagree is he's going higher. I think the data is going to come in July surprisingly weak. I think the housing used cars starting to roll over. I think he's going to get what you want, but there is structural inflation being baked in. I've talked about the third level of inflation being ridiculously hard. It's going to take time, aka services or wages, however you want to refer to that.
Right.
Jerome Powell said two things at his presser post Fed day. I'm going to share them with you because I believe one and I don't believe the other. And one of them obviously was the Fed's going higher. There's 2 more rate hikes this year. The other thing he said is we won't cut for 2 years. I believe
I didn't hear that.
Yeah, I don't think he said it explicitly, but that's basically it's going to be a long, 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 long time, right?
Right.
At least 2 years. I believe that last statement a hell of a lot more than he's raising two more times. Again, I think we could be at 5% for years.
Right.
I still think the analogy holds that if he goes in front of the oven and goes up a couple more notches, the cake's ruined, and he'll have to cut. He'll have if he goes higher, he'll have to cut sooner. Is kind of my thinking.
Yeah, and I don't disagree with you there. I think the real question is how fragile is the banking system really? I think it's very fragile. We've only
Agreed.
seen the tip of the iceberg with,
Yeah.
the bond issue that basically took down these three banks. I mean,
Mm-hmm.
some of the largest bank collapses in history. We have not yet seen the impact of commercial real estate valuations on these
Yeah.
banks. And
Yeah.
depending on the data that you look at, I don't know, I haven't dug into all their sources, but somewhere between 50 and 70% of commercial real estate loans are done by smaller regional banks. And so we're already seeing in the news, pretty much several a week of, big companies handing over the keys to the bank and saying, we're done. Big office spaces, big retail malls throughout the country that are just not going to be able to self-correct and handle the debt service because quite frankly, the paradigm post-COVID, people aren't shopping as much. People aren't using office space. And so they're not going to just be able to fill these spaces at today's, rents to be able to cover that debt. They may be highly vacant for much, much longer. So knowing that and knowing that these banks are going to take huge hits to their balance sheet because they're basically going to have to write off these, loans as defaulted, that decreases their assets. So my liability to a bank is their assets. So if I default, their assets fall, just
Mm-hmm.
like what happened with these bonds having to be marked down. I think from the data I've seen, there's over 130 regional banks that basically, if they had to move their bonds over to available for sale from hold to maturity or write off some of the commercial debt that they have, they would be quickly insolvent. And so the
Yep.
longer rates stay high or the higher they go, to your point, the more risk there is both on the bond side and the commercial real estate side of devaluations and bank failures. The question in my mind is, what are the Fed and the Treasury and the Congress preparing for to be able to basically bail out or hedge these failures in the event that they felt they had to raise rates higher? We don't know. What we have seen is anytime there's a crisis, they're going to be the bank of last resort and they're going to
Yeah.
find a way to bail them out. There's not enough money in the FDIC to cover the
Not even
amount
close.
of failures that could happen. So barring them coming up with some new type of extraordinary measures, I agree with you that any additional raise in rates could really cause this spiral domino that could cause more fear, more people pulling money from the banks, and then them having, less liquidity and less reserves to handle all of this. Jerome Powell does not want to be faulted for creating the next savings and loan crisis, which
Agreed.
is very likely to happen if they continue to raise rates. So, what does he do? I don't know. I tend to think that they probably will raise it another quarter point in July just to show that they are still being hawkish and
Mm,
then see how things go. But it really depends on the data. And
yeah.
they unfortunately watch the data in arrears to make their
Yeah.
decisions about the future rather than trying to get ahead of it, knowing that some of this data is flawed. So I really don't know if he raises rates or more. I tend to think that he will still raise another quarter point and see how things happen. But he's in a very precarious position and he has to talk
Yeah.
tough.
Oh, it has
Um,
to. Yes.
and I don't think that they're going to cut rates unless they break the banking system. If they do, they will have no choice but to save the system and
Mm-hmm.
then let inflation be persistently higher. But even if they cut rates, if inflation stays high, once they stabilize things, they'll start to raise them again, in my
Yeah.
opinion.
I love the fact that we disagree. It's always wonderful to see, and I will stand by my call that they're done. He has to talk tough. He can't tell the market he's done. He doesn't want to let it rip. All of that. I get it. I understand the theater, but it doesn't mean I don't know how this ends. And it ends with him not doing anything. But let's
Yeah.
close out and talk about the economy. I think I don't know if you saw the dot plot, but they generally kind of thought GDP would be stronger this year. I think last dot plot had us an average of 0.4, which meant a recession in the second half was in the numbers. They raised it to us 1%. So, do you think we have a couple of quarters of negative GDP in the second half, or you think that's delayed or soft landing, or what's going on?
It's really tough to tell, Michael. The more we go on, certain things are very resilient
Mhm.
in terms of the job market, right? People are still spending on services and on vacations, and that's not slowing down in a lot of areas. So the consumer is a little more confident and still spending. And there is more labor force participation. I read that this morning than what there has been. So some people that were kind of deciding I'm going to live on unemployment or I'm not going to work, they're starting to go back to
Mhm.
work. They're starting to
Yeah.
get those second jobs. And when they have that spending, it gives them that income, it gives them a little more confidence to spend. So
Mhm.
is it possible we still have a soft landing? Yes. But at the same time, again, 8 out of 10 of the indicators that the NBER looks at to declare a recession are already in recessionary territory. They're below the line of zero.
Yeah.
It's just wages and labor force participation, jobs that essentially is still hanging in there just enough to keep the economy, somewhat positive. So I tend to think we're going to have a recession. I think if the banking system breaks, and that's the big what
Oh,
if, it'll be a very bad, deep, long recession. If they can keep everything stable at this point and we do see inflation start to come down, I think theoretically it could be a soft landing, but I think the probability is very low because if you
yeah.
look historically at where we are, um, the Fed raising rates this rapidly, it's never ended in a soft landing ever historically. So I think we have a recession. How bad and how deep it is really depends on what happens with the banking system, in my opinion.
Very cool. Well, we will be talking about this every week. You have an amazing playlist. It's 3 or 4 years deep, so they can go back and watch what was really going on when any day or in at any time. But Anna, if they wanted to follow you, where would they go?
You can find me on my website at reimom.com for coaching and consulting, and you can find me on social media at Anna Kelly REI Mom.
Thank you so much.